This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news the US Fed is setting the scene for rate cuts down the track. When remains uncertain, but financial markets have priced one in fully by November. The next big piece of relevant US data is Friday's CPI release. But first up today, even though futures markets indicated whole milk powder would hold in this week's GDP Pulse event, but there would be downside risk to skim milk powder, in fact both fell. In the event, whole milk powder slipped 1.2% from last week's full auction, and skim milk powder fell 1.4%. That puts both back to late April levels. The lack of gains might worry some of the analysts who forecast next season's Farmgate payout levels. American retail sales are rising faster now. The weekly Redbook report on sales activity at physical stores was up an impressive 6.3% from the same week a year ago. Obviously, that is way faster than inflation. We haven't seen a surge more than that since the end of 2022, when the base was very weak. And that is reflected in SME business attitudes. The NFIB Small Business Optimism Index rose in June to its highest level of the year. Although, to be fair, it's only back to 2023 levels again, and in the longer context, current levels are not high. In a semi-annual monetary policy report to Congress, Fed boss Powell told the Senate Banking Committee that the central bank does not expect it will be appropriate to reduce interest rates until it has gained greater confidence that inflation is moving sustainably towards 2%. He said data in the first quarter did not support a rate cut. But he did note that the more recent inflation readings have shown some modest progress. He said reducing policy restraint too little or too late could unduly weaken economic activity and employment, while doing it too soon or too much could stall or even reverse inflation progress to date. His core message, however, was that the US economy is no longer overheated. Taiwan reported surging exports overnight, up more than 23% from the same month a year ago. It was their strongest growth in export demand since 2022 on the back of technology products. Analysts had expected an 11% rise, which itself would have been strong. Twice that is something special. And China might also be about to report a surge in exports, but they'll be more about trying to get in ahead of new American tariffs, after which a shadow will follow. In China, giant property developer Vanke warned that its losses grew sharply in the second quarter of 2024, saying that investment in some projects has been overly optimistic. In Australia, the Westpac Melbourne Institute Consumer Sentiment Survey fell in July from June. That leaves it broadly in line with the very low levels that started in July 2022. Pre-pandemic, these levels were generally 20% higher. So far, their Stage 3 tax cuts have done little to improve sentiment. The biggest declines were amongst middle-income earners, Victorians, and hospitality and construction workers. About 60% of those surveyed now expect the RBA to raise its policy rate, a big rise from the 41% expecting that in the June survey. According to the widely watched NAB Business Sentiment Survey, business conditions eased further in June, but business confidence bounced back up. It is surprising that business confidence is now back to positive territory and at its highest level since early 2023, when conditions continue to deteriorate. What business owners see to justify that is uncertain, but to be fair, the rise is hardly out of the margin of error. And India is about to overtake China as the top driver of global food demand over the next decade, according to recent estimates from the FAO. Southeast Asian nations are also on the rise too for food demand. The fading of China, due in part to demographic shifts and an about-to-fall population, is a key global trend. Global food prices were low and stable in June, and lower than in any of the past 3 years. Given inflation over that period, the real cost of food is back to levels first reached in 2007. For meat, it is back to levels first reached 10 years ago. For dairy, back to levels first reached in 2010. Food prices are no longer a global stress point. By just about any measure, Farmers should be paid more. The US Treasury 10-year yield is now at 4.30% and up 3 basis points from yesterday. And the price of gold will start today up a minor $5 at $2,351 an ounce. And oil prices are $1 lower at just under $81 a barrel in the US, while the international Brent price is now just on $84.50 a barrel. And the Kiwi dollar starts today 10 basis points softer from yesterday, now at 61.2 US cents. Against the Aussie, we've slipped to 90.9 Australian cents. Against the euro, we're holding at 56.7 euro cents. That all means our trade weight index starts today at just under 70.5 and little changed overall. And the Bitcoin price starts today at $57,435 and up 2.4% from yesterday. Volatility over the past 24 hours has been modest at just on plus or minus 1.8%. Join us at 2 p.m. later today for the RBN's monetary policy review. No changes expected, but a tone change could move markets. We'll have full coverage. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.